Alan Neckman of Agora Financial joins us now for the weekly options alert. What's your trader talk for today, Alan?
Fireworks. Fireworks from fundamental facts, not fears. We've seen the markets take off and new all-time highs in tech and the S&P, not just yet for the Dow.
Let's take a look at your WPI trade trackers. You have a lot of trades on here.
November plays, 2.5 weeks. So the IWM, which is Russell 2000, that's made a breakout comeback. It's trading still between 150 and 160, so we'll see if it can make another run there. We're at about at break even, but that's an example of why we trade options to ride the ups and downs. ExxonMobil, oil's bouncing back. We also have some earnings here that impact some of our plays. We've got Verizon's and AMD, got very close to taking your 50% profit in AMD. So we'll see if that's the catalyst that these stocks need.
December
plays, Bank of America. Sold them too soon. 50% profit on the first half, 100% profit on the second half, keeps going up, but that's fine with us. FireEye sold the first half at 50%, we have earnings there. And then we have a January play for Cleveland Cliffs, has almost 3 months of time. And so it's sitting at its break even. We'll look for that to have a healthy little bounce.
Well, this week your WPI trade trigger is pointing at BP.
Yeah, we talked about oil. Oil's been stuck in this range, looking for another breakout above the 60 level. BP, British Petroleum, trading between 35 and 40 since July. That target's 45, which is about 15% up above. The January 37 calls. Now the low on this stock is around the 35 level or so. So you're buying an in-the-money call. This stock's essentially unchanged in 2019 compared to the S&P, which is up 20%. So as oil comes back, when we were seeing a little bit less worry about the global growth slowdown, then I think this stock will come into play.
Your trading floor takeaways for today. Start with the VIX.
VIX prints. VIX prints 12. Now, it seems like a low level. The VIX is down 50% in 2019. That's a lot of anxiety that's been taken away from the market. At this level right now, we're still about 35% above that low that we saw in 2018. So still more downside in the VIX, meaning more upside in stocks.
What's behind the Dow delay?
Dow delay, I don't know what it is. It's only 30 stocks, so it's not a true representation of the big overall market. So it's about 300 points away from the all-time highs made in July, about 1%. So we'll look for that to bounce back and play ball.
And then finally, number 3, S&P 3,500.
We talked about S&P 3,000 here in the last couple of weeks. Now, 3,500 is the target I get from the drop that we had from last October's high to the December depths. So that 600-point decline on top of those highs targets 3,500. Now, that's about 15% above. Now, we've seen this each and every time the market's had a sharp sell-off. Eventually, it moves the distance of that drop on that old top. Now, we can also add into the fact that the last times that we've had 3 rate cuts in a row, the markets have rallied 10% in the next 6 months and then 20% the next year. So that's not very unreasonable.
Perfectly said on a Fed day. Thank you.
Thank you.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.